go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, best-selling author of the book, The Tower of Trading, returning guest, friend of the show, Simon Ree. Simon, how are you?
I'm really well, Rocco. How are you?
I'm absolutely stoked to have you back. Simon,
Awesome
do you think people still watch soap operas? Do you think even the young generation would know what maybe like a novella, like a Mexican novella? And the reason I'm asking is, to me, what's playing out now with the Fed is like, it's like Dallas. This is like days of our lives. This is like, days of the Fed, and you can't make it up. You absolutely can't make it up. Let's pick up where we left off last time, talking about inflation and rates. And what have you seen since the last time we spoke?
Well, I think last time we spoke, we talked about whether or not inflation was transitory. And we kind of thought, the Fed have got a case to make. Well, that they had a case to make early on, because you could argue inflation was being impacted by very low base effects that we saw during a big deflationary shock, which was the COVID crash. Mm-hmm. And the last time we spoke, I think we said the whole transitory argument is really starting to fail, because those base effects are rolling off and inflation seems to be accelerating, not decelerating. Yes. And we've certainly seen a continuation of that trend. So as everybody knows, inflation last week, CPI printed at 6.2%. That's the highest reading since 1991, 3 decades ago.
Scary.
Not only that, we've got now 6 consecutive months of the CPI printing above 5%.
Oh, so nothing to worry about there.
Well, that's only happened 5 other times. In the post-war period, and barring one event, it's happened for at least 13 months. All right. Now the one outlier was in 1991, but you might be too young to remember this. But the world was actually going through a pretty nasty recession at the time, and kind of the recession is really what kind of killed inflation there.
And I don't like that. It's the second time someone had on the show brings up that all word recession, and I hate it. I spoke to Aisha Tariq, and basically her point was, if we are going to see an inverted yield curve on, let's say, the 10-year bond, then 12 to 18 months, we're going to have a recession. Do you share those views, or do you have different views?
Well, this is what the bond market is telling us, right? We got 10-year yields at 1.62%. The bond market is just shrugging its shoulders at inflation at the moment, which means one of two things. Either the bond market is convinced the Fed has got this, all right, and the Fed is going to really increase restrictive policy in the short term to crush inflation, which is not something the Fed's communicated, or we're headed for another deflationary shock. If you think about a 10-year bond yield, it's approximately a function of real interest rates and economic growth. Mm-hmm. Right, so 1.6% rate isn't particularly bullish on either. So I certainly have some sympathy with that view.
So 2 things, right? It's for me, and this is purely anecdotal. This is just looking at charts, looking at price action. Everything long-term still looks really bullish, right? If you take this yearly candle as a breakout candle, subsequent candles will retrace. I mean, maybe like, let's say 30% or 35%, whatever. But long-term, we are still really bullish. My feeling is that the market is doing a very good job at hiding what is exactly going on. We talked about it offline as like, oh, look, it's the emperor's new clothes. Everyone can see, but no one says anything.
But this has been going on since 2009, hasn't it? Really? I mean, it's kind of Fed policy has really hidden a sea of kind of, underlying problems.
Yes.
Let's put it. Economic growth has been moribund for nearly all of the past 14 years. We've been at well below what you previously called trend growth.
Yes.
But the stock market has just been on fire, and right now, more so than ever.
And I think that's where the danger for a short-term trader comes in, is listening to that narrative and being caught up in that narrative, in the Fed and the story and the soap opera, and just looking at the charts, because even I'm getting uncomfortable because I can see it's extended to the upside by quite a lot. It doesn't mean it's going to come back, right? I mean, the market is decoupled from what's really going on. So it's that noise, but that noise, you said it the other day, it's becoming so loud. And it's even like people that pride ourselves on being able to block out the noise. I find myself that I can't. That's why I completely stepped away for a bit.
Right. I think it's a wonderful time to be a trader. I mean, when you look at things like forward PE ratios, you look at cyclically adjusted PE, you look at market cap to GDP. I think it's a horrible time to be a long-term investor right now.
Yeah.
I mean, really, what are you pinning your hopes on for the next 10 years? I think it's a great time to be a trader, and just being able to have, that nimble mindset to be able to go from long to short, in a couple of mouse clicks.
Yes.
I think that these are really, really powerful advantages that, small retail traders have.
Yeah. Let's talk about stops. And one of the biggest one being obviously, well, I would say biggest, but it's become a divisive stop, right? In Tesla. I mean,
Tesla, it's the number 5 stock in the S&P 500.
Yeah,
it's bigger than
worth,
Facebook.
It's worth more than all the car. Well, Rivian is now sort of there. That's debatable, but I mean, it's, if you add up all the other car manufacturers, it's bigger than everyone combined. My point is, there was this Twitter games that Elon is playing, right? So the first one was the poll: should I sell stock? Yes, no. Turns out it was premeditated. Those calls were made before he put the poll out. Now, he absolutely...
and his brother had already sold stock.
Well, insider trading isn't insider trading anymore. It's just trading, right? Because if I know, let's not go into the SEC and the power that I don't think they have the power to do the investigation. We're moving at such a rapid pace. It's just like one thing after another that it kind of falls behind the wayside. But so Bernie Sanders said, he put out a tweet and said, it's this old narrative, high net worth individuals need to pay the tax. And Elon responded in a tweet that broke Twitter, "Oh, I forgot you're still alive." And everyone went, it was retweets. It was just like a rapid fire. And he followed it up with, "You want me to sell more stock, Bernie? Just say the word. Just say the word." And I thought, man, this guy is playing chess on another level. We are here on the ground playing 2D chess. He's playing 3. It's not just him. He's playing 3D chess with his team, or whoever is advising him, because it's not only one person. He's got people around him that's saying, okay, you need to do this, you need to do that. And we're moving the pawn pieces. What is your take on the games that he's playing and let's not even talk long-term future, short-term future for Tesla?
I mean, let's talk about Elon's games. I mean, this is nothing new, all right? I think that the first scandal I can remember was when he said, funding was secured for taking it private.
Stock is too high. Yes, 420, whatever
420,
the joke was,
And I mean, he got into a bit of hot water over that, right? Because he you got the CEO.
Don't do it again. Don't do it again.
Lying to the market on social media about potentially price-sensitive material information.
Yeah.
But Elon's troll game on Twitter. I mean, he's probably second to none. I reckon he's probably even better than Donald Trump in terms of his trolling ability. And of course, Donald's been put on ice now.
Yes. I miss him.
I think
not that way. He used to be able to move. Remember those tweets about the trade wars? Damn, where are the trade wars now? You go hashtag trade war. Well, 200, 300 points. You could see it like in an instant. Here we go. We were on, and now it seems to be Elon is playing those games, but he's playing it differently because he will change his name to Lord Edge, and he will. Tweet ship to the moon, and he knows his audience, right? It's not the Trump audience, it's this new generation of audience that he has.
And look, if you're a Twitter shareholder, honestly, you probably expect this behavior from your CEO now, because that's his form, that's his track record. And if he wasn't do it, you'd be asking him, well, why aren't you doing it, Elon? Come on, this is why we're invested with you.
So
if you go into Tesla stock and you're surprised by his performance on Twitter, then you really haven't gone in with your eyes open.
So where do you go short term with Tesla?
Look, I mean, I think it's tough. I saw it, a week ago, and I kind of made the comment that it looked ridiculously overvalued.
Yes.
Shorting Tesla, though, has just been Tesla's been a short seller's graveyard.
Yeah.
So I didn't short it because I've made a lot of money in Tesla.
Yes.
From the long side. It's been one of my kind of best trading stocks over the years. I did have a small short on XLY.
Yes.
The consumer discretionary sector, and Tesla is obviously a big mover in that. That was also looking similarly extended. So I bought some puts on XLY. I'm still holding a position there, but looking to take profit on that pretty soon. Tesla, if you look at where Tesla was on the lows yesterday, it had a 20% fall. It was in a kind of official bear market, but it bounced a little. I think it only closed down about 2% by the time the market closed. So,
crazy, right?
Arguably, it's kind of, you from a technical perspective, you could argue it's washed off the near-term excess and could be consolidating for the next leg higher.
To me, it's trading like a meme stock. And to see 20% and, down 20% or 20% drawdown and then finishing 2%, that is ridiculous.
It's
a sign of the
it's the number 5 stock in the S&P 500. And it's trading like a penny stock. It really is ridiculous.
You talked about some of your positions. What are some of your favorite option plays in a market like we're currently seeing? If you can maybe try and, because you need to have some form of idea if you want to get involved. But if on just a simple level, what would those setups look like?
Well, I mean, the setups that I've been really focused on over the last 4 to 6 weeks have been earnings setups. So what I look for is stocks that have a good track record of share price appreciation into earnings. The stocks that exhibit pre-earnings optimism. Yes. Because what you usually see in that run into earnings is not only, you often see the share price rally, but you see IV rally as well. IV really tends to surge into that uncertainty.
So IV is implied volatility for those that...
Implied volatility.
Okay, but not maybe familiar with the term IV. Okay.
So it's one of the setups that I teach in Options Academy is the explosive earnings setup. And that's, I've had some good wins on that with, last week it came out of stocks like CrowdStrike and Palo Alto Networks. And I'm currently in, don't laugh, I'm currently in GameStop actually. That is a stock.
We hit it here first.
It is a meme stock. I'm not in it because it's a meme stock.
Simon is into meme stocks. The next thing, next month when you're coming back, you're going to tell me you're stacking SADs. Not likely. Let's not go that anyway. Let's not go that far. Let's not go that far. Simon, before I let you leave, the one you talked about earnings, and I'm just looking at figures here. The one which was surprising to me is Palantir, because they basically, the earnings were good and they took an absolute right beating, I think 9% down. Any thoughts there? Because, what does the market want?
Well, we see this every earnings season. You'll see stocks that look like they killed earnings and they're down 10, 20%. And then you see other stocks that earnings look pretty meh and they're up 10 or 20%. And it's all about performance relative to expectations. And it's not even necessarily the official expectations. It's it's the whisper number that, is circulating a day or two before the result.
Okay.
And then occasionally you get a stock like Peloton, which just genuinely disappoints.
I read an interesting one. I said, it was a lady, I can't remember her name now. She said, people just woke up to the fact that they bought an iPad strapped to a watt bike. And I thought that was, that was classic.
Yeah, absolutely.
Simon,
I never understood that business model.
Thank you so much for coming on. If the listeners want to connect with you and buy your book, because they should, and also leave those links or tell me, and also tell us what you're busy with.
Yeah, so if you want to sort of learn more about what I do, toweroftrading.com is my website. If you'd like to buy my book, it's the best $8.99 you'll ever spend, toweroftrading.com/book. And really and truly, I'm looking to run another webinar first week of December. So I'll advertise that through the usual channels, LinkedIn and YouTube and so forth, but really focusing on, I'm going to change the focus of this webinar a little bit, talk a little bit more about entrepreneurship, setting up a business, how trading can potentially be the bridge to you doing that. And
taking it to the next level.
Yeah, escaping the rat race and becoming your own boss, master of your own destiny.
Awesome. Love it. Simon, thank you so much for joining us. To our listeners,
always a pleasure.
Peace, love, and prosperity. And we'll catch you in the next one. Cheers.